Two resins, two very different stories this week. And the difference between them is the difference between a cost story and a margin story. If you don't know what you're dealing with, you're probably paying for both. I'm Michael Workman with Resin Smart. This is Resin Market Moves. Let's talk about what actually happened in the market this week and what it means for what you do here on Monday. I want to start with polypropylene because it's the cleanest story. May polymer-grade propylene contract prices, that's PGP, settled down 7 cents a pound. And that's in line with where spot PGP had been trading all month. It fell below 40 cents this week. So the polypropylene contract is expected to follow that. So expect 7 cents there. It's a cost pass through, the market working the way it's supposed to. Feedstock had gone up. Now it went down. Resin should go down. Your price should go down. The problem is we've seen some producers already talking about 3 cents for June, and they'll point to Total's force majeure at LaPorte that's still out there, and a Phillips 66 turnaround coming here in June. That is a story around supply disruption. Don't let the supply noise drown out the cost signal. One force majeure doesn't change what propylene costs to produce. You document that PGP settlement and present it to your supplier. We want you to request that price reduction in writing if you need to do so from your contract standpoint, and just get out in front of it before your June pricing conversations get too far along. Polyethylene is the more important story because it's where buyers that aren't paying attention are going to start feeling the pain here. May polyethylene settled flat. Producers, if you remember, wanted 20 more cents a pound and they didn't get it. That buyer's strike out there in the market was able to push back. Spot market was very soft and global supply was available. But what's happened here this week, we've seen a major producer announce 10 cents a pound of increases for June. We're expected to see others follow suit. And if we take a step back and think about the feedstock picture, spot ethylene is at 29 cents a pound, which is down on the week. Ethane is flat at 20 cents a gallon. And we did see crude oil, that WTI number, drop $5 a barrel, $5 a barrel this week on news of some geopolitical de-intensification in the Middle East with U.S. Iran. The Chinese markets are under some downward pressure. European polyethylene prices are expected to extend their losses here into June, and there continues to be availability of global supply of polyethylene. It's not a cost story right now. It's a margin story, and it's a test to who's paying attention. So when you get those June letters, and they're coming if you haven't already gotten them, your first question cannot be how much do we accept? It really must be, well, what did ethylene actually do, and which part of this increase is tied to that? So build that cost file, have the numbers before those letters start hitting. Across the board in ABS, feedstock volatility continues. Butadiene, styrene, and benzene have come down. So we haven't seen June increases announced, and it's reasonable for ABS buyers to hold right now. Polycarbonate with benzene and refinery grade propylene still high. The cost market, or the cost stack up there, is high. There are not June increases announced, though. This is a cost-driven market. That's not supply-driven. Demand has been very low in polycarbonate applications. In both nylons, we saw 15 to 16 cents a pound of increases in May. No June increases announced. And after the relief in crude oil, again, when we see the volatility there, it's directly tied to benzene, and the volatility feedstock justification for price increases in nylon, when it starts to come down, get harder for the producers to make. So continue to hold firm. We did see in PET a little bit of an outlier. The May paraxylene contract settled up 4 cents. PTA also rose with it. So we are entering peak bottle season. Hurricane risk is starting to, it's right around the corner here. And it's a market where the cost support is genuine right now. And it's just not the same setup as some of these other markets like polyethylene. And PVC is soft as well, with Chinese exports really undercutting domestic producers. Construction, new housing starts are falling, and it's just not a market that supports increases right now. Polystyrene did see some modest increase in May, but less than the producers had wanted, tied to, again, benzene. No June proposals are on the table. We do want to keep our eyes on America Styrenics' turnaround at their Allens Point plant, which could tighten availability, but again, with polystyrene being so soft, it's likely to make a big of a difference. And I want to pause there and talk about the macro level. situation. Consumer confidence is just really bad right now. In the month of May, the University of Michigan does the sentiment report. It's at historically low levels. Gasoline and inflation are no surprise. The culprits, and even with crude dropping, I mean, yes, we're expecting to see some more de-escalation in the Middle East, and these things can change the equation for benzene linked resins, the aromatic chain. You'll hear people talk about more than people are going to realize in June. We were talking about only up in that space in nylon, polycarbonate, ABS, polystyrene. When crude starts to come back down to that level, and if it stays there, it's going to be less of a leg to stand on for those folks in that part of the value chain. So here's what I want you to walk away with more than anything this week. Cost pressure and pricing power are not the same thing. In polypropylene, the cost pressure is real and it's documented. And right now, this month, it points down. In polyethylene, the producers are building pricing power through positioning, not the realities of the cost structure of the feedstocks there. In PET, the cost support is genuine and verifiable. And in nylon, we did see some increase that has really run out of fundamental fuel as we move into June. But the letters are going to continue to come given the state of the market with, again, gas and inflation up so much and the uncertainty that is still out there with the Middle East. The question is always going to come back to you, though, to answer this. Is it a cost story or is it a pricing story? And the data most weeks is going to be there to tell you. The only requirement is that you look and you build it into your people, process, and technology, and then be able to operationalize that within your procurement initiative at the right time. And that's what we can help you do here at Resin Smart if you need any support in that process. And if to that end, if you want to see exactly where you stack up against the market, grade by grade, SKU level, that's what we do. And I can help you understand what that benchmark process looks like for your business. All right. I hope everybody has a great week and we'll talk to you next week. Cheers.